Hello and welcome back. As usual, today we evaluate the strategies in our portfolio that have achieved the best results in the last period. One of the coaches at Unger Academy here, and we develop and use automated strategies on the major futures markets like gold, stock indexes and more. Today we'll look at two strategies that have performed well recently in the S&P 500 market, which is making some exciting moves today. Here you can see the workspace with all strategies for the S&P 500 from Unger's Personal Database. However, today I'd like to introduce two strategies characterized by excellent trades in recent weeks. Let's start with this strategy that we're looking at now. It's an intraday trend following strategy, which means that positions are closed at most until the end of the session, as was the case with these last trades. And that will be the case with this trade as well, which opened at the same time as or immediately after the inflation data was released. This triggered huge volatility and the market has increased as much as 50 points. This strategy still decided to continue to follow the trend and close the position at the end of the day. Let's now have a look at the report of the strategy. We see that it's had mixed results, some great times and some not so great times over the last 2 years. This strategy was developed in 2017, so more or less at this point. And let's say after an initial phase in which the strategy had also worked quite well, there was an abrupt drawdown, a slowdown in this strategy, which then peaked at the end of 2021. And from that point on, the strategy was able to make up lost ground by making a series of exciting gains. The strategy places orders at two levels, calculated from the session's opening. These levels are calculated simply as a distance from the opening price, determined using the ATR. If the market moves upward from the open equal to a multiple of the ATR value, then the strategy will enter the market long. If we go back to the report on this strategy, we see that it is an intraday strategy that doesn't have a high average trade. We've already added the commission and slippage costs that would be incurred when live trading on this market. Specifically, we've entered $30 per trade, including entry and exit trades. You can see that this strategy, which is based on a trend following approach, works almost better on the short side, so it's even more effective. The average trade on the short side is indeed larger than the average trade on the long side, and all this in a market like the S&P 500, which we know has a very pronounced bullish bias. Now let's move on to the next strategy I want to introduce to you. It has also performed well recently. It's a strategy that we call hybrid, in the sense that the long side of this system enters with a mean-reverting logic, so against the trend, as was the case with the last two trades. When the market goes down, the strategy tries to buy. In these cases, things didn't go very well. There was a stop loss of $1,300, then a break even, which with the costs amounts to a $30 loss. And then an excellent short trade that, unlike the long trades, enters following the trend and with rules that are pretty similar to those of the previous strategy. Indeed, if we see a downturn move from the open of the day to a certain level calculated using the ATR, the strategy enters the market short. The trade was very successful in this case, with a net profit of $3,020. Again, this strategy has been out of sample since 2018, so we can say more or less from this point forward. You can see that it has also responded very well in the post-development period and is at all-time highs in equity. In this case, the strategy, being multi-day, has a much larger average trade. We are at $268. It is well-balanced trades between long and short. We still recommend more long trades than short trades in this market, because with a buy and hold like the S&P 500s, finding the best time to sell short is much more difficult. Over the last 2 years, this strategy has managed to bring home about $24,000 net of commissions and slippage, while the other strategy, which has also had a very favourable moment over the last 2 years, reached gains of over $30,000.